What is that? That's a goddamn camera. I decided to add a camera today to see if how it works. If you like it, let me know. If not, then I will remove this pretty face once again. Let me show you my ETF sector here. You can see it's all red all the way through. And yeah, it could be better, I guess. But let's look into it. Let's have a look into it. We will look at the gold to silver ratio, as you can see here. Ever since 2021, we have been in this upwards expanding formation here. I think we can't go all the way up here to 90, and that's where I think we will roll over. If not, and we will pierce through, then that would be insanely bullish for the dollar and very bearish for almost anything else. So yeah, let's zoom in here a bit, as you can see. We talked about this here in the past week, where we had, big up candles, and then we had, small red down candles, and I said that I don't think this is a top, and surely enough, we're getting a leg higher now. This is the move number one, so maybe we'll have 1, 2, 3, hopefully. Oop, it's a 3, as you clearly can see. But yeah, we have to wait and see what happens. But the next move is up in the short term for this ratio. I would like to mention that the gold to silver ratio and the dollar is very, very correlated to each other. So if you overlay the two charts, you can clearly see that they are correlated as a lot. Gold, big down day today, 1%. Still, we are above this golden trend line coming down here all the way. I think, as mentioned previously, like I don't know how far, 2 weeks ago, 3 weeks ago, I say we will probably go all the way down to 1920, and that's where the big test will be, in this area right here. And yeah, until then, we just have to watch it drop, I guess. I think we'll go all the way down for the big retest, and then we will see what happens. Silver, a lot weaker than gold. As you can see, we broke out here, broke out, retest, double top, and went in for a big drop, and now we're up below again. So silver, very, very short term. As you can see, this big red candle here destroyed, really was just insanely bad for the structure. And the short-term momentum just made it sure that we couldn't hold here. Now we are below again. And the FIB 0.618 is coming up at around just below 23. I think we'll go to that level, and then we will see what happens. But now bearish silver, short term, long term, very bullish, bearish, short term. Oil, as you know, the big level is somewhere between 82 and 83. We need to get above that before we can become bullish. Why? You can, in my view, you can clearly see the level here. We need to get back above before we can say that oil is bullish. But I would like to show you a quick thing on the 8 hourly. As you can see, I angled this one a tiny bit compared to yesterday, but we had a breakout, and now we do a retest. And this one needs to hold, right? Because then we have a chance of climbing up to the red zone, where we will then see what happens at that point. But if this is a fake out and we roll over like this, insanely bad, insanely bad. And we should be looking to test the green support. But at that point, I don't think it will hold. I really don't. Nat gas, however, as I posted on Twitter as well today, where did my camera go? I'm back again. Here I am. Nat gas, as mentioned on Twitter as well, was going for the retest, and we're getting a bounce here. How big will it be? How high will it be? I don't know. For now, it's bullish. You can also see here, if you draw the line here, you have some support from these lows here all the way up. So that's a double support. Actually, it's a triple support with the horizontal line as well. I expect a bounce here. How high? I don't know. I think we'll go all the way up here to 2.8 until proven otherwise. So let's see. Uranium, URA. As you can see, the long-term downtrend is here. Fake out, as you know, And now we have broken out again, and now we're just fumbling back and forth above the line, which is bullish as long as we are above the line. Again, if this is a second fake out, you can watch out down below because that would clearly sting. Also, this is, as you know, still some sort of bear flag across here. Let me zoom in here a bit on the 1 hourly. So what I'm looking at right now, whoops, excuse me, guys. What I'm looking at right now is a boop, boop, like that. I think this could be, hopefully, if you're a bull, could be the bullish setup that we will have to form here. If this happens, then the retest is confirmed and we have the breakout. But this means that this area right here, right, has to hold. So 20, we cannot go below 20, especially if you get below 1980. I don't like that at all. So tomorrow, big day. As you can see, I have added this. Again, it's very short term, so don't take too much into it. But you can see the trend line coming down here, and hopefully we can break to the upside here, and maybe confirming this very short term bottom. URNM daily, as you can see, we haven't broken out, but as you can see, we have the highs all the way down here, still within. So that's good. Then I have added these dotted trend lines here, which I think actually also with reference to the URA, I think this is the bull flag that we need. So we have broken out here. And I think this could be the bull flag that we need to break higher. Until proven otherwise, this is my thesis. And if we break out, obviously we go for the big, big test at the golden trend line here. Again, until proven otherwise, this is my take. URA divided by uranium spot price, still doing nothing. I have added or changed this line a bit here so that it connected this high here and then these two bad boys down here. We're still holding the green support zone. We have done that for, what is it, 3 months or so, more or less, 2-3 months. And yeah, it should hold. But as you can see, uranium miners are coming down, but the spot price is going up. So it means that this ratio, URA divided by the miners, by the spot price, is having pressure downside, as you can see here. So we need some momentum to the upside in the miners to start to outperform, because the spot price has been really strong lately, just ticking up every single day with $1 or half a dollar or so every day. Fairly quickly here, URA divided or measured against the CRB. We have still broken out, but there's always a but, as you can say. As you can see, we have broken out here, some retesting, double top, retest again, and we need to take out 0.08 before the uranium miners is really will start to outperform the CRB. Before that, it's just noise in my view. The URA, as you can see, I have removed my inverted head and shoulders here because at this stage it's no longer any form of head and shoulders. It is basically arranged here, and as you know, we have the momentum down, sideways. Often is continuation to the downside. So until proven otherwise, I think the the Nasdaq could be in for some outperformance here, and I think the next stop could be this green here, this green low here, at around 0.0014. Copper. I'd like to show you copper. This is a ratio or a fractal that I did and posted on Twitter. I think these are very similar. Let me show you very quickly. This is the pen and squeeze here, breakout, failed breakout all the way down. If you look here, back in 2021, we have the squeeze, fake out all the way down. And what are we doing now? We have a similar move up here, maybe, right? We have a similar move up from here. So if this fractal plays out, this one will hold, and we will go all the way up here for copper. But then again, if we break to the downside, as always, as you know, then copper is in for a big, big drop down. And that usually means, you know, copper is always ahead of recession time. So take it as you may. Again, speaking of recession, the Baltic Dry Index, as you know, has been in a range for 2 years, more or less, a bit less. 1 year, excuse me, 9 months. But But today I think the nail in the coffin has been set, and with this candle here, I think we're going all the way down to here for a wave 5 down to the COVID lows here. Also confirming that, shipping recession, shipping going down, meaning high likelihood of recession coming. So yeah, Baltic Dry Index looks insanely bad. Boat, the shipping ETF, again, I only have a few lines on this one. We have the bearish upward channel here, right, and then we have the breakdown, retest, resumption. Let me show you the 1 hourly. Maybe. Excuse me, this is what happened here. Why can't it show? No, anyways, let's do the daily. It gives a clear picture anyways. Maybe we have a short-term pennant, bullish pennant here. Maybe. I don't know. I don't know, to be honest. If it's a bullish pennant, we can go all the way up again here and revisit the underside of the trend line. But yeah, I don't know. Again, GOGL, which is also a shipping company. As you can see, why is this one angled like that? Big, big, big head and shoulders. Neckline is the blue one here. Look where we are. If there is a place in time to bounce in this stock, it's right now. Getting below the neckline, again, confirming that shipping is going down. Again, recession is probably coming. So yeah, it looks like there's a lot more percentage chance that we go down here compared to up. Let me put it in that way. Sim, again, also one of the, it's a hated stock, I know, but we are almost at the IPO levels, just going down, down, down. So shipping looking very bad. Copper within the next week can look very bad as well. If oil also goes down, below the levels that we have been looking at, to me, it's recession time within half a year. So yeah, that's my take on it, guys. As always, comment below, follow me on Twitter, YouTube, and all that good stuff. Have an awesome day, and we'll see you tomorrow, maybe.